Welcome to Drill on Earnings. We have quarterly results, the latest look at Applovin. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. I said, Applovin, such an important company. I'm tongue-tied. It's a $132 billion company. We look at the 50 most important companies in technology. I think this is one that's going through tremendous changes right now. What a good time to look at what's going on there at Applovin. Your Q2 earnings a little bit better than Wall Street expected here, specifically $1.26 billion in revenues. And $2.39 in earnings per share, depending on how you look at things, both better than estimates. I say depending on how you look at things because this business is going through a really big change. They have sold off what was once their largest business, which was in-app purchases and in-app advertising. So let's think about mobile games, whatever, Clash of Titans, whatever the game is you love to play on your phone. I avoid these things because it's a time suck. People get addicted. They spend a lot of money. And they've spent a lot of money in these in-app purchases. And that is the business that Applovin sort of got big with. But they have shifted. Their advertising business has gotten so large here, and it's so much more profitable. And frankly, the stories were confusing to investors that the company said, let's get rid of the app business. Let's sell it off. We'll take a little bit of a stake. So in the quarter, they saw fantastic growth in revenue in their advertising business, a 77% increase on a year-over-year basis in their advertising business, which is going to be all their business going forward. But compared to last year, it's up only 17% overall. So you got to know what you're looking for when you look at these results here. I want to talk you through them because at the end of the last quarter and the last day of June, they completed the sale of their app business to Triple Dot Studios. They got $400 million in cash. They got 20% of equity in that company. We'll see what happens to Triple Dot in the future. Do they do an IPO or something? They're going to use that $400 million to buy back shares and invest in the businesses that they have here. So we would expect a few things to happen, and one of them we're already seeing. Look at the new operating margins of this already fabulously profitable business. Operating margins were over 40%. The new business has 76% operating margins. We're going to expect that to maybe even continue to get better. And bye-bye to the app business, the business that really got them here, that was most of the revenues, even in 2022. It's gone as of now. So how did the stock react? Well, stock sold off a little bit in after-hours trading. If I check the latest here, down, it's really kind of flat in after-hours trading right now, and up an amazing 466% in the last year. But, the old saying is dance with the date which brung you, or dance with the date that brung you. But that's not what they're doing. The date that brought them into this game, there is out. Selling stuff in apps is out, and it's a brand new business going forward. The Applovin CEO, Adam Foroughi, who we've had on this show before and drill down with a longer interview in the past. Here's what he had to say on the conference call.
The numbers are getting bigger now. So we're now in a place where we continue to put up big numbers every single quarter. Q2 isn't particularly strong seasonally in the category, but we still grew at a really healthy rate. We continue to have iterative lifts, and we continue to deliver the advertisers a lot of value. So every quarter they come back to reinvest more as they continue to see strong return on ad spend on our platform. So what gives us confidence is as our numbers are getting bigger and without something that's what we would call the next big model enhancement, we're still growing at really healthy rates. So everything else that we're talking about just creates this upside opportunity on the business. Not only the incremental data flywheel from the new category, the new demand from the new category, but also the fact that inside gaming, there's more improvement to our technology to come. And some of that improvement at times will be those model enhancement, substantial lifts that no one expects.
All right, well, there you have it. What's it all mean? What's your big drill down earnings takeaway? And what's the one number that tells you a whole lot? Well, I've got that. Applovin Q2 earnings, confusing to some, but I'm going to help break it down here. Your essential summary shows you that 17% revenue growth on a year-over-year basis was better than Wall Street estimates because Wall Street had discounted the sale of the business that was once so great for them, that being the in-app sales. So their revenue, if you strip out the old stuff, was up 77% in a year-over-year basis because they got rid of their apps business, sold it to Triple Dot Studios for $400 million in cash and 20% in equity. And no, that's not the number that means a whole lot. The number that means a whole lot is zero, not quite zero, but subscribe to us so you can join the growing number of our subscribers on YouTube, Instagram, TikTok, and Twitter at Cory TV. But more importantly, the number that tells you a whole lot is zero. Zero is the number because bye-bye to the app business, zero revenues from their in-app business of sales and in-app business of advertising. That's gone for Applovin going forward. This is just a very profitable advertising business. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.